Welcome to Breaking News to Trading Moves. Today, we're looking at a recent performance update from the design technology company Autodesk.
We are. And while it's focused on just one company, Autodesk's outlook really serves as a clear indicator.
An indicator of what exactly?
It highlights how customer spending is moving, especially at the enterprise level. The money is flowing toward AI-enhanced software tools.
And that's creating a kind of separation then.
A very visible one. You're starting to see a clear divide between companies that are set to benefit and, well, those that might struggle to keep pace. And that goes beyond just the engineering sector.
Okay, so that's our mission here, to understand what Autodesk's numbers are telling the market about AI adoption and how that's splitting the field into, let's say, winners and losers.
Exactly. We saw the market react almost immediately, which confirms that investors are using this company's performance as a sort of barometer for the entire specialized software space.
All right, let's get to the headline event. We're talking about Autodesk, ticker ADSSK. The stock moved up after beating third-quarter expectations.
And it wasn't just that. They also guided their fourth quarter revenue and profit above what Wall Street was forecasting. That's a really clean signal of strength.
So what was behind that strength? What were the drivers?
It really came down to two things. First, you had very strong subscription renewals, which means customers are sticking with their core CAD or computer-aided design tools.
Okay, so high retention. What's the second part?
And this is the crucial part. The upbeat guidance was tied directly to high demand for their new AI-driven design tools.
So it's not just business as usual. It's the new, smarter features that are pulling in the demand.
Precisely. It's a sign that companies are willing to open up their wallets for platforms that deliver real efficiency gains through AI. They're looking for acceleration, and right now AI is delivering that in the design world.
And if Autodesk is seeing this, it suggests a broader trend across the entire design and engineering software space.
It does. Which brings us to the beneficiaries.
Right. Let's talk about the companies that are positioned to do well from this. The first category would have to be their direct peers, right? AI design and engineering software.
Yes, you look at companies like PTC, that's ticker PTC, and Ansys, ANSS.
So why does good news for Autodesk lift them up too?
Because Autodesk's results validate their entire business model. They all sell highly specialized subscription-based design and simulation software.
But is it just a general sense of optimism, or is there something more concrete?
Oh, it's more concrete. Take PTC. They're focused on product lifecycle management and industrial IoT. ANSYS is, the standard for high-end engineering simulation. These are essential tools.
Non-negotiable for big manufacturers.
Exactly. So when Autodesk proves customers will pay a premium for AI features like generative design that spits out optimized prototypes, it tells you that PTC and Ansys can also successfully charge more for their own AI enhancements. The willingness to pay is there.
So the customer is saying, we need these AI tools, and we'll pay top dollar for them from whichever vendor has the best ones.
You've got it. It just confirms that the whole market for high-value engineering software is healthy and hungry for advanced features.
Okay, let's move from those direct peers to another area that benefits: construction and infrastructure design platforms. This takes it from the screen to the real world.
It does, and this is backed up by specific comments from Autodesk's management. They pointed to very healthy demand from their architecture, engineering, and construction clients, the AEC sector.
And when architects are busy and investing in new tools, that means projects are in the pipeline.
Absolutely. Once that initial design is done, the actual building process kicks in, and that requires a whole other set of tools for project management and logistics.
Which brings us to who?
This is where companies like Trimble, ticker TRMB, and Bentley Systems, BSY, come in. They operate in that same construction budget world.
Right.
Bentley, for instance, is all about complex infrastructure, roads, bridges, utilities. If project owners are digitizing their entire workflow, which the Autodesk numbers suggest they are, then Trimble and Bentley benefit from that spending momentum.
So strong architectural design spending points to strong infrastructure build spending later on.
That's the connection.
Now, what about the third category? This one seems a bit broader. Creative and digital media design suites.
This just extends the central theme, which is that people are willing to pay for AI that makes complex work faster.
And it seems to apply across very different fields.
It does. Look at Adobe, ticker ADBE, and Cadence Design Systems, that's CDNS.
Two completely different worlds. Adobe is for creatives, Cadence is for designing microchips.
Yes, but the underlying dynamic is the same. An engineer using Cadence to design a chip and a marketer using Adobe to build a campaign are both using expensive, specialized software.
And they both want to work faster.
Exactly. If Autodesk can get its users to pay more for a tool that cuts rendering time from hours to minutes, it validates Adobe's pricing for its Firefly AI. It also validates Cadence's ability to charge more for an AI that optimizes a chip layout. The market sees this premium AI model works everywhere.
Okay, so the pattern is clear. Specialized software plus AI-driven speed equals a willingness to spend.
That's the formula.
But for every action, there's a reaction.
Yeah.
And everyone benefits. Let's talk about the companies facing some pressure after this kind of news.
Right. The first group you'd look at are what you might call the slower-moving engineering software vendors.
Who falls into that bucket?
I'd point to Altair Engineering, ticker ALTR, and Stratasys, SSYS. Now, these are solid companies in simulation and 3D printing.
So what's the issue? Is their tech not good?
It's not about being bad, it's about being comparatively slower. When a market leader like Autodesk puts up these kinds of growth numbers fueled by AI, the market immediately looks at everyone else and asks, where's your AI story?
So investors are basically chasing the fastest horse.
They're chasing acceleration. If Altair's guidance looks a little flat next to Autodesk's, capital might move away. They start to look like laggards in comparison, even if their core business is fine.
That makes sense. Now let's talk about a totally different area that's affected. Hardware, specifically legacy PC and workstation-focused hardware.
Yeah, this is a classic case of budget reallocation. As these complex design jobs move into the cloud, customers might think twice about buying the newest, most expensive computer.
Why is that?
Well, if I'm paying for a software subscription where all the heavy lifting, all the rendering, and AI computation is done on the vendor's cloud servers, my need for a top-of-the-line local machine goes down.
So the customer is trading a big one-time hardware purchase for a higher recurring software fee.
That's the mechanism, precisely. And that creates a bit of a headwind for companies like HP, ticker HPQ, and Dell, DELL. The overall budget for design tech is only so big. If software is taking a bigger piece of that pie,
Then hardware gets a smaller slice.
yeah,
But hang on, don't you still need powerful machines locally to run some of this stuff?
you do, and that's a fair point. But the momentum right now, the model Autodesk is pushing, is heavily reliant on cloud resources that are bundled into the subscription. So at least for the medium term, the budget priority is software, and that puts pressure on HP and Dell today.
Okay, that clarifies the current market view.
Yeah.
What about the last group? Generic SaaS without a clear AI edge. This feels like a lesson for the whole tech industry.
It's the broadest takeaway, but a vital one. Autodesk's success just reinforces that the market will reward you if you can show how your AI is making customers money or saving them time in a measurable way.
And if you can't show that direct, measurable value,
Then you risk getting lost in the shuffle. Capital and attention get pulled away from more generalized productivity tools. Think about DocuSign, ticker DOCU, or Box, BOX.
their services are useful, of course. E-signatures, cloud storage.
They are essential, but the AI features they add tend to offer smaller, incremental gains. It's not the same as, cutting a complex engineering task from a week down to a day.
So the market wants to see those big, splashy, AI-driven results. And if they don't, the money goes elsewhere.
Exactly. The market is demanding proof that your AI features translate directly into value that an enterprise customer is willing to pay a premium for. Specialized design software is just the clearest example of that happening right now.
So to wrap it all up, the main lesson here is that enterprise spending is flowing to specialized tools that use AI to deliver real, measurable speed and efficiency.
That's the bottom line. The design tech space just gave us a very clean financial picture of that trend.
And when you see that kind of clear separation happening in one specific area like design, it really serves as a template for what might happen in other industries.
It does, and it leaves an important question for you, the listener, to think about. If this pattern is so clear in design, how quickly will we see that same gap appear elsewhere? In other sectors that depend on high-value software, who are the leaders with a clear AI monetization plan and who might be left behind?
An excellent thought to end with. Thanks for walking us through all of that.
My pleasure.
And just a necessary reminder for everyone listening, this discussion is purely the opinion of the author of the material presented and is for informational purposes only. This is not financial advice, nor is it a recommendation to buy or sell any of the companies mentioned, including Autodesk, PTC, ANSYS, Trimble, Bentley Systems, Adobe, Cadence Design Systems, Altair Engineering, Stratasys, HP, Dell, DocuSign, or Box.